Here we go. The opinions and views expressed in this podcast are solely those of the Mortgage Dudes only, and not those of Equity Resources Incorporated or Greentree Mortgage Services. We're not crazy. Think of them as your slightly odd, yet occasionally hilarious uncles that are very knowledgeable about mortgages. I will say, together they have over 45 years of experience in the housing market, and that may or may not have included bourbon, beer, and cigars. They are here to enlighten and entertain, and we cannot be responsible for the language or jokes. So buckle up and be ready. Things are about to get interesting.
There's so much information on the internet, and there's a lot of misinformation. So Ed and I just kind of said, look, let's just put some accurate content out there. Screw it. We're going to be ourselves. We're not this suit wearing. You'll never see me wear a tie. I can't tell you. Ed, do you own a tie?
No, my shirt says this is my fishing hoodie, baby.
Hi, welcome to Mortgage News. I'm Shane Marzullo, one of your hosts. I've been in the mortgage lending since '96, and I'm helping families in Ohio and Michigan. And I'm with Ed Moloney with Equity Resources.
I've been in the business since 2003. I'm also called Farmer Ed, Mortgage Ed, Fisherman Ed. You can follow me on Facebook. I'm a reformed accountant and got in the 12 years accounting, now 21 years in the mortgage industry. I cover the states of Massachusetts, Rhode Island, New Hampshire, and Ohio. And me and Shane are going to bring you a lot of fun.
That's right. That's right. So when we talked about this, we always said, hey, look, there's so much information on the internet, and there's a lot of misinformation. So Ed and I just kind of said, look, let's just put some accurate content out there. Screw it. We're going to be ourselves. We're not this suit wearing. You'll never see me wear a tie. I can't tell you. Ed, do you own a tie?
No, my shirt says this is my fishing hoodie, baby.
Yeah, exactly. So ties to me are useless. I know there's some hoity-toity people out there. They're like, well, you have to be. I'm sorry. I came from the old school person. Never judge a person by the clothes. You judge them by their character. And to me, that is one of those things I hate. I just hate the other things. It's fine if you want to wear a tie and dress up. Just not me. If you want your loan officer to like, I demand them to be in a tie. That's not the person you want to deal. I'm not the person you want to deal with. I want people who want to be honest with them and tell them the truth. Basically, is what it is. We called ourselves the Mortgage Dudes. It's real simple. We basically, we're simple guys. We're bald. We're beautiful. We smoke cigars. I drink bourbon. Ed drinks beer, and it's just a thing that we do. Now, for me, I'm known as a little bit of a bulldog, pit bull in the industry. The reason is real simple. I believe in telling the truth and doing what's right for the person. And if someone's not being a loan officer or realtor, I have no problem calling them out because people are buying a home. This is the biggest thing that they will do. There's no takebacks in the industry. It's not like a toaster going, don't like the color. I'll take it back to Amazon and get another one. So to me, that's how my mentality is of everything. I don't know how you operate.
Yeah, so very similar. Being in this 21 years, I care about the client more than I care about anybody else. I've been accused of being the unpaid consultant because I'll take time with people 2 years before they're ready to buy to educate them all the way through. My biggest pet peeve in this industry is lack of communication. And if a prospective client goes to a local bank, they say, give me your paper, here's your number. They have no freaking idea what that number means. With me, I go through debt to income. I go through credit. I go through loan programs. So they are fully educated. I've had leaders and managers say to me, but you're the unpaid consultant. They may not work with you. They may go somewhere else. Great. If I'm not a fit, I'm not a fit. I have over 150 Google references or reviews, 250 on Zillow. I love what I do. I'm passionate, And it's fun. I'm also the former geek because I was a CFO. So I know numbers, but I'm no bullshit. It's about getting to the points. And one of the major points right now, Shane, for our viewers and for people in general is, oh my God, 2023 was the worst year and it's worse than '08. And there is so much misinformation, misconception.
Yep.
How many realtors, for God's sakes, and mortgage people were in the damn business in '08? And they're talking
Yep.
about how 2023 is worse. I'd love your opinion on it. I'll give mine because I think our
Yeah.
viewers need to hear it.
Yeah. See, in 2000, those years, 2003 to 2000, we were still, I was brokering back then as well. And I saw the market. Back then people were doing 2-year fixed loans or doing 3-year fixed loans, and after that it would turn to adjustable, and then they would go and refinance to get out of that, or they would do, oh, I just want this house, and I would do interest only loans, and then they came out with loans less than you'd pay less than
Negative
interest.
loans. Negative
Yeah,
ambulance.
yeah. I am proud to say in my career, I've done zero
Me too.
negative AM loans
Zero.
because I would never put a
I
person
wouldn't
into
put
that.
myself or my
And
family, so I never put them.
no, it was horrible. And I think what happened was people in 2008, the market started decreasing. We didn't have all of a sudden now we have abundance of homes, and people like, well, I don't want to refinance, or I don't want to buy. And we had this had too many homes but less buyers. That individual was, I can't afford it now. My rate's gone up. My rate going up from a 6% or 7% back then. Now it's at 12 or 13. It was an adjustable rate. So they went to go refinance, and guess what? Equity wasn't there. I can experience. I've had a lot of clients that were like, "Oh, I'm just going to rent my house out," and they bought a new one. And what they really truly meant to do, they were doing is a buy and bail. They'd buy a new home for a fixed rate, better rate, and then just let that house go because that house was so upside down and water wise. It was so just upside down in value. So I think that's what kind of cost our
I
market a
would
bit.
agree. We were the
So,
Wild Wild West then. Pre 211,
oh yeah,
2011, the rules were different. How we price loans, this, that. Come 2011, new regulation. There is no playing the game of profit and all this. They changed it, which was a good thing. Negative amortization
yep,
loans were gone. 2-year arms with fixed, and then, you know, you had to pay a buyout at 3 years or gone.
yeah. You remember that? Remember they would do you'd be like, oh, it's a 2-year fixed. But if you paid us off in the first three
There's
years,
penalty.
there was a 3% prepayment penalty or some
So
crap
the
like that.
world has
It,
changed on that. A lot of mortgage people aren't into regulations. We are because that was the wild, wild west. I was in the business
yeah.
five
Oh yeah.
years and really struggled. My business took off after the rules because being the
Yep.
former accountant and like Shane, being blunt and to the point. And I think the issue is back then, the bottom line, Shane, you hit it. We had more houses
Yep.
than people. People were trying,
Yep.
but we had an abundance. It comes back to supply and demand. I am hearing realtors, mortgage people, pundits say 2023 was the worst. No, the
Yep.
difference is we have two generations, Generation Z and the millennial generation. Neither were, one wasn't even there, and the other one wasn't a buying power. Now both are in that buying age. I have kids that are Generation Z. I am proud to say from
Yep.
2019 to mid through 2023, 54% of my clients were Generation Z or millennial. Why? Because I can
Yep.
educate. And the reality is now we're not going to see a downward spiral of houses and prices. Why? Simple supply and demand. We got more people. You people came. We
Yep.
produced these people. And now we got less houses. They don't build houses in most parts. Yeah, you get some in Ohio, some in North Carolina, but our building is way behind our people.
Yeah. Builders are down
Now, if
for
you're in
sure.
Boise,
They.
Idaho, or certain parts of California, they were buying on speculation. Of course, speculation's coming down.
Yep.
From
Yeah.
Ohio to Maine, no way. I mean, values, do you
Yeah.
think values are going to come down, Shane?
I don't. There's no document history. So people want to say, well, values. I'm like, okay, well, here's what I'm seeing. Like I've always done a lot of foreclosed homes for people buying foreclosed homes. I do a lot of the HUD homes with agents because we know how to do them. And what happens is, back then, oh, they're asking, HUD's asking, 110,000, let's say, and they people would get the winning bid for like, 108 and have, or 110 and having HUD pay closing costs, or whatever, Fannie or Freddie home or whatever foreclosed home. I just had one now where a client bought the house. The initial bid was for 118. We just got the contract in. It was 120. Actually, it was one. They did it to 123.6 because she got it for 120, but they added 3,600 for closing costs for her. Which HUD. Now that being said, that's a great deal for her because she's gonna get yeah, she's paying more than asking, but it's a bank owned home, so technically you do have some built in. You're gonna have equity in that home. It's not market value. Yeah, she's got to do some updates to it and everything, and that's the thing is you're still seeing homes, bank owned homes. They're not going for a loss like they were, and that's what kind of brought the market down because it was a bank owned. Oh, I gotta sell it and everything. I remember
Abundance of
sellers.
homes back then, and as you said so perfectly, is we had funny loans, people couldn't pay them. There was a flux in the market. And our markets are very different. I mean, a first-time buyer home
Yeah,
on Cape Cod is 500 grand. You know, in New England,
yeah,
if I could
not
buy a
ours.
house for 400, but in Ohio, a $600,000 house in parts of Ohio is the Taj Mahal. But it puts it,
Yeah. Well,
but
yeah,
I
yeah.
don't believe we're going to see foreclosures like '08. Do you agree?
No, no, I don't. And the biggest thing is it is supply. And when I mean, here's the thing: in 2008, 9, and 10, I remember sellers actually bringing
Money.
bringing checks to the closing to pay
Yeah.
off the mortgage because they were
And
so
then you
underwater.
want a short
That's not the
sale.
case. Now we're having the buyers bring
No.
it more than what the appraised value because they want
Yeah,
the
that's
home.
called an
And
appraisal waiver where client is saying,
yeah,
I'm going to
yep,
offer 200, but I'll pay up to 210. And we're seeing, $30,000 appraisal waivers in my
hell yeah.
market. It was crazy. That is slowing down. I
Yep.
don't believe we're going to see appreciation 30, 25%. We're going to see the normal 0.5% to 5. Certain markets will come down 5 or 6, but in general, no. Do you believe it's a good time to buy? Shane.
I think it's always a good time. The time is when you're ready. Yeah, I mean, ultimately is like, well, I always laugh because people are like, well, I kind of want to wait till after winter because I don't want to move in the snow. And I'm like, okay, well, I understand that, and I don't know what your area is like, but in the Toledo, Ohio area where I'm at, if it's snowing, it's very few occasions. It's cold, but you have a more of a chance to be dumped on by rain in March or April or May or June, even July, than you would have a chance of snow in January, February,
See, here we'll get a lot of
March.
snow during those times, but that's been not been the objection I've seen from buyers. The objection is this. I'm going to wait till rates come down. And I got to be honest, where we are in a lower inventory market, and as I said, a starter home on Cape's 500 grand. In the western part of the state, yeah, you get a starter home for 250, but there's no jobs out there.
Yeah,
So the fact of the
right.
matter is, I don't care what the pundits say. Here's the fact. What Shane said is perfect. You must be ready to buy. How do you find out you're ready? Do an education call. Me, Shane, if we're not in your market, call us. We'll find you a loan officer there. Get
Yeah.
smart. What does that mean, Ed? Don't get pushed. Get educated. Go over debt to income.
Yep.
Find out the gross income versus net, which is insane. Do a call with a professional. Then you can find out if you're ready. Because you're sitting at home, many people in fear. Shane, they're frightened because their parents lost their house
Yep.
in '08 and they don't know. But guess what? Renting, that landlord can kick you out. Now, at least in my area, good luck finding an effing rent because rents are through
Yeah.
the roof and they're limited.
Yeah, rents are definitely higher up. But I mean, it's funny is because I still get parents like, well, make sure there's this or make sure. I'm like, they don't do that more. That was back in 2004. That's gone. They don't do they well. I want 100% financing. That's not around. That unless you're a veteran or doing a USDA loan or doing a grant program. That's
And you're
that's
not as
that's not
competitive in the
your
market. That opens up a whole different discussion, which we will get into detail in other podcasts.
yeah.
But
Oh yeah.
3%. So Mary and John say, I need USDA. Real quick on USDA, you have a front end and back end ratio. Bottom line is your debt to income is going to be limited. So what you can buy is
Yep.
limited. You go 3% down. You've got in my area mass housing. In your area, you'll have other programs. We have Home Possible and Home Ready in both of ours, and they're 3% down. And depending on where your income is, it reduces PMI. You get a gift from a relative. This is back to the importance of education. And our goal in future
Yeah.
calls is to hit on different topics. Please, Shane will give you an
Exactly.
email. Email us questions, ideas, because this is about you guys. Shane, we are about 15 minutes in. We don't want to go too long in our
Yep.
first one. But let's
Yep.
talk about
No.
cigars
Yeah.
for a minute. What's your favorite cigar? What is your favorite
Actually,
cigar?
my favorite cigar is Undercrown Shade. I love that cigar. I don't know what it is, and it's just a smooth stick. And I buy a bunch of different ones. And I'll try here and there, and I'll get some. But that one is just like always my favorite go to. I don't know why. I just like it. It's a more of a medium mild blend.
And
So
for
I'm not
me,
a
it's an Ashton. So I am into the light cigars. I've done the Monte
yeah.
Cristos. I also like the Leaf. I love the Ashton. It's full bodied, but I like the lighter Connecticut wrappers. By the way, guys,
Yep.
I'm a type 2 diabetic. I'll be 52 this year. And so when I'm not in my game, I'm drinking a lot of hazy beers, but two very good low carb beers that don't taste like piss are the following. One, Lagunitas Daytime. Three carb beer. Phenomenal. Phenomenal, phenomenal. And then Dogfish, Flighty Mighty. I will be showing those in future ones. I'll drink one on here, tell you how it
Yeah.
tastes. I'll
Yeah.
recommend you get one. And I think that's important. What do you drink for a bourbon or scotch?
You know what? So I'm a big bourbon. As far as scotches, there's only a few scotches I like, only because it comes from a different
Yep.
side of the island. It's more of the sweeter stuff,
You are
which is
certainly
more
not
bourbon
sweet, so
esque.
that fits.
Yeah, yeah, I know. I have to get some sweetness into me, But I am just like my favorite bourbons are like Buffalo Trace makes a great bourbon. They make a great. It's called Eagle Rare. It's very good. It's hard to get right now. Shocker with all bourbon because it's popular now. The Willet makes their pot stir is a great bourbon. It looks like a genie bottle, so it's kind of a cool thing. I'm not a person who likes a lot of the hot stuff. Like beers. People are like, oh, I like the hopsy, really overly hopsy. I'm not a huge beer fan. Matter of fact, my wife won. We were our gym had a elephant a white elephant exchange thing, and she got like one of it was like a 6 pack of Christmas ale, Great Lakes Christmas ale. I don't know
No,
if you've ever
I've
had
heard of it.
that. I have. I'm gonna probably crack one open here next week or so and try it. I think it's more of a sweeter, which I might like. I'm just that's the other thing. I'm like beer is like if I always laugh because like, well, what kind of beer do you drink? I'm like, honestly, I like Coors Light or Busch Light. I'm
Yes,
old, It's I know, yeah. It's just I know some people like call it Panther
yes.
piss or whatever. It's just a very mild one. I don't mind
So
it at
we've
all.
talked about our
So
history in the industry. We've talked about 2003 or 2008 to 2023. We've
yep,
talked about fear and the importance of education. We're going to do different topics in the future. Let's end on this.
yeah,
I know your hobby is working out with your big muscles. Mine is
yeah,
fishing. So I live on Cape Cod, which to give an idea of the people, it's about an hour and 20 minutes from Boston. I fish year round, just went trout fishing this weekend. And a little tidbit about me is I have a boat. It's called the Attitude of Gratitude because we also have 3 horses on my property. Those are my wife's and daughters. I pick up horse shit every morning. That's how I get my muscles. This guy does
Yeah.
all kinds of gym crap that I'm not into. Now, if you talk about your hobbies, we'll end and we'll look forward to our next
Yep.
show.
Yeah. I'm big. I do like to golf. I
Are
love
you any good?
golfing. Honestly, I'm okay. I'm a low 80s
I have no
shooter.
idea what that
It's
means.
but I can go. That's actually a decent score. I can shoot really great one day, and the next day I can just. Matter of fact, the same day I can go really good and I can go really bad, and just it's like someone to flip the switch. It's just I don't get it, but I do like to work out. I do it more for my health. I'm 53, and
You got
I'm
very
one of
still
those
well, let
people
me
that
tell you.
yeah. It's well when you're here's what I always tell people: when you're bald and fat, you're timeless. Because like my business card photo, it's like 15 years old, but I'm like I look the same, no hair, until my eyebrows go gray, I'm good. And it's so I don't have to worry about it. I just leave it as is and kind of deal with it.
Well,
But yeah. So yeah, I mean, as far as the whole thing, we're gonna do a podcast. We're gonna put one out once a month. We're going to talk about lending stuff. We're going to get first time home buyer programs, lending myths. There's so many freaking myths out there, and people believe in stuff, and a lot of it is more of not what what's on the internet. It's what that bank may do. We always like to tell everybody Fannie Mae, Freddie Mac, and government loans, they have certain rules, and you can't go below that rule. That's their rule. We as a lender try to say, hey, we only want to go up a little. Maybe we have certain things that we go up on, but we don't try to make it even harder. We want to make it affordable as easy as possible, and that's the
But
biggest
that
thing.
comes with
So
knowledge. Knowledge is power. And with the years we have
yeah,
and continuously educating ourselves, there's the damn difference.
Yeah. We want to educate agents, first-time home buyers, my 18th home buyer. I mean, so definitely, everybody. I want you to subscribe to our channel. You'll get a notification. We're going to be on YouTube, Spotify, Apple, all the other podcast things that go out there. Ed and I are. Ed is no IT. I'm some IT, and I'm good enough where I know certain things. But then I count on our wonderful IT department, and some people might say, well, wait a minute, you're as Equity Resources, Shane's Greentree Mortgage. Believe it or not, it's the same company. Equity is my sister company. We work together. And if we definitely want people out there who are like, hey, I have a question about this.
You know,
Email us. It's mortgagedudes@callequity.net. If you email us, we'll answer your questions. We'll email your questions. We'll even pull up online here and do something about it if we have to. We'd love to have your opinions. We'd love to have your your questions, because we're here to help, and we want to give you the straight facts, not the BS that goes out there. I literally just get freaking annoyed all the time, and
we'll hit on some of that,
it's
some of the
just
BS stuff. I would like to go one
yeah,
last parting shot, and that is simply this. Fear is everywhere. I believe in the same following words I know Shane does. With time and a plan, anyone can attain home ownership. Hear those points:
yeah,
time and a plan. My oldest first time buyer was 79 years old. My youngest was
yeah,
19. Time and a plan.
yeah.
We're here for the future to get through the BS, to be real dudes, to give real info, have some freaking fun.
Yeah, I had a 90-year-old client, and I go, look, our requirement is you have to live 30 years to pay this mortgage. He's like, I don't know about that. I go, I don't care. You're living. You're staying alive. We want you to pay.
No, but that,
Well, thank you again, everybody. Ed, it's
thank you.
awesome. Thanks, everybody. We're looking forward to doing this
You'll see us again in
and doing
January.
more.
In January, it's my birthday.
Yeah.
I'll be 52, so I'll be catching up with you.
Yeah. There you go.
Thank you all for listening. Shane, thanks for doing this. Have a great day, everybody.
No problem, buddy.